Ladies and gentlemen, good day and welcome to Sonata Software Limited second quarter FY21 results update conference call. As a reminder, all participants' lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touch-tone phone. Please note this conference is being recorded. I now hand the conference over to Mr. Srikar Reddy, MD and CEO, Sonata Software Limited. Thank you, and over to you, sir.
Yeah, thank you, Vikram, and good morning, everybody, and welcome to the analyst call post the announcement of our results for quarter 2 FY21. The results are all posted on the website with the necessary analytics. Today I have with me Mr. Jagannathan, the CFO of the company, Mr. PVSN Raju, the Chief Delivery Officer, Mr. Ranganath Puranik, the Chief Growth Officer, and Mr. Sujit Mahathi, the Head of our India business, apart from Mr. Satyanarayana, the Head of Finance function. So quickly getting to an analysis of the results and the outlook for the future. As I mentioned last time in the call we had, I think we've just come out of the uncertainty which the pandemic has faced, and we have set in a motion a lot of actions to deal with the immediate issues facing the company. And it also said that, as we saw it then, that things were changing for the better, and we believe that the worst was behind us, and we would be looking forward to growth as we go forward. And to see the numbers this quarter, that's, I think, an absolute reflection of what I had said then. So obviously, things continue to get better in the market as we see. So there is more. While there is still caution, there is more openness to spend as we go forward. And as I said, obviously the strategy was twofold: to see how much of the business which we had lost we could get back, and then also look at growth from both existing clients and new clients. Look at the market, and if you look at the industries overall, we continue to see the travel and non-essential retail still badly affected, apart from some non-essential manufacturing. And we generally see there is secular growth across the different industry verticals. We had also initiated some cost reduction measures last quarter, about some voluntary pay cuts for the senior management, mainly, apart from the other costs which were not there because of the nature of the way we are operating, of travel and some office administration expenses. This quarter, we have reinstated part of those salary voluntary cuts, and we will reinstate all of it back in the next quarter. We did not add to the manpower last quarter. We did not replace the people who had left the company last quarter, so that we had the right level of people for the volume of business we had last quarter. The other trend we have seen last quarter is a greater shift to offshore, and we'll continue to see that as we go forward. So looking at the future, and we also, I think, this time have tried to present our India business in a more analytical fashion, so that you all can get a better understanding of the business, not just from a top line, bottom line part, but from the cloud and non-cloud mix, the revenue margin distribution by clients, the number of clients and what they contribute, the annuity and non-annuity nature of the business. So, and we'll give more details as we go forward in terms of analysis by product lines and the number of years customers have been with us and so on and so forth. So you got a much better appreciation of the business than just the top line and bottom line and margin kind of stuff. So going forward, as I said, we will continue to see the same trend in growth in both top line and bottom line in the next half of the year. Overall secular growth, and we will start adding people back into the business in the subsequent quarters. The GBW is the company which we had acquired, obviously continues to be affected by the pandemic, but I think we should see growth in that business in Q4 of this year. So overall, I think now going forward, the strategy is to focus on aggressive growth post things settling down, whether April or July next year. So we will be starting to invest very aggressively in sales, marketing, pre-sales, consulting, etc. From now to March to prepare the organization for growth as we go forward. So that's a high-level summary of an analysis of the performance of the business last quarter and the way we see it going forward and what we plan to do as we go forward. I'll be very happy to take questions later on in the session. I now hand it over to Jagan to take you briefly over the numbers and analysis for the quarter.
Yeah. Thank you, Srikhar. Thank you for your brief outlook update. Good morning, all. I will now take you through the key highlights of this quarter. Are you able to see the presentation? All of you? I hope all of you are able to see.
Yes,
if there is any.
Thank you.
Yeah. Okay. Yeah. This talks about the consolidated financial performance of the revenue as well as the EBITDA and PAT growth rate. If you see, has been a very, very solid performance compared to what it was last quarter. We have grown the revenue by 7.1%, and the CAGR has been consistently growing quarter on quarter. Our revenue growth has been 5.4% CQGR. So the EBITDA has been growing solidly. We have a solid performance growth in terms of EBITDA also. 11.2% has been the growth now. This is again a solid growth with a CQGR of 2.6% EBITDA growth and PAT CQGR of 2% growth. We have again the profitability has grown faster than the revenue growth overall. The international services, this is the highlight the performance of international services. The Q2 has been very good for international services with the revenue growth coming in with a solid performance, and the EBITDA and PAT growth has also been very solid. We have an EBITDA percentage of 24.4% and PAT percentage as 15.1%, which has been the industry beating EBITDA and PAT percentage for us. This is the domestic business. Domestic business has also done well. If you the profitability has gone up in domestic business. If you see here, the revenue growth, as we have been mentioning, we have to measure the business on gross contribution, absolute amount of gross contribution. It has gone up from 30. Again, we maintain in spite of change in the absolute revenue value. We have maintained the same profitability. Hence, the overall EBITDA as well as the PAT has gone up. PAT has gone up by from 11.6 crores to 13.6 crores this quarter. Domestic business has been consistently performing and maintaining the profitability and increasing quarter on quarter. This is the financial summary of all the businesses. If you can see here, the international services, the quarter-on-quarter growth has been 4%. Year-on-year, there was a dip of we have a dip of 8% on this domestic services. The revenue growth has been a dip. and this is the consolidated revenue has also is being growing for, the revenue may have because of the domestic domestic revenue. Again, as mentioned earlier, the domestic business, we should not see it on the revenue performance. We should see it on the gross contribution. The EBITDA has been a solid performance for us. We have been doing the domestic profitability has also gone up, and the PAT has also gone up for us in the international as well as the domestic business. There are some operational metrics. We will leave it to you on this because these are all covered in our investor presentation itself. This is just a summary of this operational performances. The consistently we have been growing on this. The change in a little bit of travel and ISG is probably because of the base effect. Otherwise, we continue to have the performance in ISV continue to be strong, and distribution and manufacturing and retail continue to be strong for us. And there is a change in the on-site mix. It is coming down because of the whatever the change due to the COVID. We see this as helping us to improve our profitability in future also. As I mentioned, this is all covered in the investor presentation. Again, this is just a breakup of the same, and I put it in the presentation for you. There have been a new client addition of about 10 customer additions are there. We continue to keep growing on the customer front, and we have a solid pipeline coming in this period. As Srikhar was mentioning about it, we have not replaced the people of attritions in the last quarter. That's the reason why there has been some drop in the headcount. This is a brief update. With this, I conclude my presentation. Hand it over back for the questions from the analysts on this. Thank you all. Thank you for all the support.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone phone now. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star 1 on your touchtone phone now. We have a first question from the line of Baidik Sarkar from Unifi Capital. Please go ahead.
Srikhar, hi, good morning, and congrats on a very tight quarter again. A couple of questions. First up, there seems to be some moderate weakness from your Microsoft accounts, which is quite contrary to Microsoft's own performance in Dynamics and other portfolios of theirs, like Azure. If you could give us some color on what exactly is happening there and how does the future look out there?
Yeah, so the revenue for us on that, this thing is twofold. One is what we directly sell to customers and what we sell to Microsoft as a customer on the Dynamics side. On the Dynamics side, there has been a bit of a, let's say, based on the pandemic across the board, there was a little conservatism in the overall spend across the board, and we'll see that coming back in the future quarters. But the second growth is the growth in the market where we sell to customers. That doesn't show up as Microsoft or whatever. It shows up as industry verticals. And we are seeing good growth there. So that's, yeah. So you need to look at it. The growth in the market will drive the growth in the industry business, and the growth in the Microsoft account will drive growth in the ISV business.
Sure, that's helpful. Just given how the situation is panning out in Europe again, do we foresee any weakness with the TUI account, or will the recovery continue to be smooth?
Yeah, I mean, we don't, as we see today, we don't see further weakening, but we definitely see that the more growth will be stifled. Still, there is more visibility. Everybody's expecting some kind of a vaccine or whatever it is in the first quarter, and so based upon that, then there could be first quarter as in fourth quarter for us. So So we won't see any growth. Neither we see today because they have got now a second tranche of funding, so they are adequately now funded to tide over through all these things. So they were, whatever they have started to spend, we don't see any reduction, while obviously there are absolutely no business for them because of all these lockdowns. They were expecting to do some business in this quarter, but because of the lockdowns, they're more or less no business. So yeah, the summary is that we don't expect growth, neither we, at least this quarter, I mean, maybe beginning of Q4, and we neither, as we speak, expect any shrinkage. But whatever growth forecast we are giving is assuming that we will see no growth in that account.
Sure. And lastly, we understand the India product business needs to be seen from an absolute earnings perspective and not margins. But even the absolute numbers from a YOY perspective has been weak. We understand there is some pricing pressure given the environment. Do you expect this to deteriorate further?
Yes. No. As I said, we are now going to see growth across the board.
In the domestic product business as well?
Yeah, absolutely. We grew from the first quarter to the second quarter from, I guess, 11 crores to 13 crores or whatever that is. That's like a 18-20% growth. We'll see, continue to, we expect to see that kind of a growth as we go forward.
Sure. I have a couple of questions, but I'll probably get back in the queue and come back later. Thank you.
Thank you. We have next question from the line of Harit Shah from KR Choksey Shares and Securities. Please go ahead.
Yeah, thank you for the question. Congratulations on a decent, execution to the management. Just had a query regarding, the US geography. So, in a quarter where most of, your larger peers have seen decent growth in that geography, your revenue has, come down quite substantially, by about 10, 12, more than 10, double digits. So if you could give some color on what is going on out there, that would be helpful.
The U.S. geography, I think there would be some of them would be because of the acquisitions that we have made would be project kind of a business, so that can be vary. But overall, at a consolidated level, we don't see a concern there, and we'll continue to see growth going forward.
So that you're referring to Gapbusters?
Not Gapbusters. These are like Sopris and Ibis, and these are all the dynamic kind of partners. So they can get wavy results based on projects and license margins and so on and so forth, but from quarter to quarter.
Yes, I'm sorry, my mistake. Gapbusters, I think, is more Australian. Just to clarify, you had given out a salary cut. So have you partially restored that in the third quarter, or will it be entirely restored?
Yeah, we have done quite a bit in the second quarter, and we'll do most of it in the third quarter. But as I said, all our forecasts are assuming based of growth are based on assuming that we will do all this kind of stuff. We factor in all this in the growth forecast.
Yeah, you said second and third quarter, so I'm assuming that third and fourth actually, right?
No, we did some of it already in the second quarter.
Okay. Some of it was restored in the second quarter. So third quarter.
Balance in the third quarter, and that's it. Yeah.
Right. So we can assume that by December the entire salaries would be restored to the earlier level.
That's right, and we possibly will look in the January quarter for some kind of at least a compensation revision for some people in the company.
Sure. Okay, great. Thanks. I'll come back in case I will follow up. Yeah.
Thank you. To ask a question, participants will press star 1. We have next question from the line of Dheeraj Dave from Samvad Financial Services. Please go ahead.
Yeah, thanks a lot for giving me opportunity. So I was going through your results, and in the other comprehensive income, particularly on consolidated, we see significant amount of basically exchange variation. So can you just explain what exactly there is a 13.2 crore and 23.78 crore because of some exchange variation? So because that if you see comprehensive income is 87 crore vis-a-vis 64 crore last year, while profit for the year is 57 crore vis-a-vis 72 crore. And I think broadly this is, so can you give some color what exactly this is?
Okay, I'll ask my finance team to explain that question.
This is mainly a mark-to-mark on forward contract, basically. So whatever is there, it will come into the other comprehensive income and flow back to the P&L as and when the contract are honored.
Okay. So just to clarify, so next quarter we shall envisage around 33 crore.
Not next quarter. Basically, we have contracts spreading over more than 1 year. Okay. So this is all contracts put together.
Fair enough. So that part I understand that accounting might be required, because what is happening is that if we look number in isolation, we see deterioration in the profit. So if I have to contribute something like that, well, it would be over a period of time, but mostly would be expiring in 3 to 6 month time, or it would be like stretching over, say 60-70% would be expiring in 3 to 6 month time, if you can put some timeline.
Yeah, it will be spreading over 6 to 12 months time. Basically.
6 to 12 months time.
Yeah.
Because so that was the one part. So we shall see some kind of this getting booked in 3 to 6 or 3 to 12 months time.
Yeah.
Correct. Yeah, right.
That depends on the exchange rate, basically. Yeah.
Yes. So that was the one part. And the second part, we see some kind of provision for doubtful debt in slide 31, which you had put on exchange as well as on your website. So that has increased. In fact, that has gone up highest to 0.65% kind of it. So can you give some more color? What was the reason to make this is the highest ever write down as per that slide also, whatever is available data you had provided. So can you give some color on that?
Okay, let me just answer the question first, and I can give you the thing. Basically, it's not a write down; it's just a provision based on some accounting.
Yeah. My apologies. Yeah. So provision for doubtful debt.
Yeah. Okay, I can then ask the team to explain. Yeah.
Yes. Yeah. This is the expected credit loss model. Under that, we provide for doubtful debts. It's based on that logic, as per the accounting standard.
But we envisage we shall recover basically based on business, so whatever is talk we had with clients, etc.
Yeah. Yes. This will be closed in the subsequent quarter.
And last one from my side, basically this time dividend of 4 interim, if we compare, while we understand environment is challenging, but numbers are reasonably robust. So what was the factor management considered to, in fact, if I look at last year interim dividend, it was something like 4.50 rupees to 5.15 rupees kind of it last 2 years, interim dividend specifically. So what is your thought process on dividend distribution and why we see some kind of reduction, if I may say so, in that?
No. Hello.
Yeah.
This is we continue to follow the same dividend capital allocation and dividend payment policy. There is no change on this. It depends on the particular circumstances. What are the opportunities coming in the market? What are the investment needs of the company? And what is the business support required? And there can be a small change on that. However, our dividend policy continue to remain the same.
Fair enough. That's from my side. Wish you all the best and thanks for providing me opportunity.
Yeah.
Thank you. We have next question from the line of Madhu Babu from Centrum Broking. Please go ahead.
Hi sir. So some more clarity on the top account in the ISV space. So we said that there has been some softness in Microsoft related work in the OPD side. So how is the outlook or any other new opportunities? Because that vendor is fairly competitive and a lot of large players are there in that account in the OPD space itself. So how should we see this account in more on a 2-3 year perspective?
Yeah, as I said, in the overall R&D spend, there has been a general slowdown in the end of Q1 and the beginning of Q2. We see that coming back. So as I said, we are very uniquely positioned mainly from our strength in the dynamic space, and as we see, and I think we see more spend than less spend as we go forward. So to that extent, we see us position competitively compared to others is relatively strong, both from a fact that obviously we make investments in the in the market too, and that is an important thing for that partner, that the partners also help in the sale of the product and not just deliver services to the company kind of stuff. So we see ourselves positioned very well, and as I said in my statement at the beginning, we will see reasonable growth coming back in Q3, Q4 from that account.
Okay. And second, sir, in terms of both the acquisition, Scalable and Sopress, I think this time the others vertical was also weak. Obviously, there could be something around that weakness from one of the acquisitions. So how is the integration with the top management? Have any, is that progressing well in terms of the retention of the top management, etc., and your views on both the acquisitions, how they played out?
Yeah. Both the top managements are there. It's almost now coming to 2 years since the acquisition. All the founders are there. Top management is there. In Scalable, we have seen a lot better performance. And in Sopress, I think going forward we will see that because the combined value prop for the energy and service vertical is much stronger, and I think as we go forward we'll see a much stronger performance coming from Sopress. But Scalable today is well integrated, and we are able to, their original strengths were agri commodity, but we're now going after retail and distribution clients in that market, which is mainly Australia. And then obviously the rest of it is how we take the agri business to the rest of the world. Similarly, as I said, the value prop now is more comprehensive in the U.S. market with Sopress, and we have to take it to the rest of the world.
Okay. So when we are now confident more about the growth coming back in on the hiring at the sales level and all, so would it be fair to assume that an R base like 5-6% QOQ growth momentum can come back in FY22 or maybe right from 4Q onwards?
5 to 6% year on year or quarter on quarter?
QOQ, quarter on quarter growth on a run rate basis.
That's like some 30% growth year on year.
So some of the mid caps are growing at 18% now, sir. So I think market is expecting a bigger momentum. Anyways, your views on that?
We definitely see solid growth in the next 2 quarters, and then we'll see based on that base what the growth will look like. But as we see today, I think if we continue with the same growth, I don't know whether it's a 30% growth, but I think we grew about 4.5% quarter on quarter, but definitely 3.5 to 4% look reasonable.
Okay, sir. Thanks and all the best.
Yeah.
Thank you, sir. A reminder to participants to ask a question. Please press star followed by 1 on your touchtone phone now. We have a next question from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Sir, thank you for taking the question. Sir, for your travel, largest account in the travel segment, now with this continued shutdown in the in European markets due to the COVID, second wave of COVID, how do you, earlier itself the business was majorly hit and now it seems like they have gone into the ICU. So how do you envisage, your revenues from this account going forward? And, if you can comment on whether that business can stand on its own leg at some point of time, how do you feel the client is doing here?
Yeah, that's what I said, that it had come down drastically in the first quarter and it's come back to a certain level. I think it has come back to about 25 to 30% of where it was. As I told the person who had asked this question previously, that we don't see a reason for this to be further reduced. Earlier there was a thinking that this could increase in Q4, but based on all these lockdowns, we may not see that happen also. So we'll have to wait and watch. But overall, as far as the company is concerned, as I said, they have now, I think, got an infusion from, I think, mainly various governments of 3 to 4 billion euros. So I guess they are now in the position of, too valuable to fail kind of a company. Luxury leisure travel is something which is expected to get back on its legs when all these things settle down. Maybe business travel could be affected, but leisure travel, like people are actually expecting, a lot more growth both from pent-up demand kind of stuff. So as a segment, I think leisure travel is solid. And as I said, the company is now has enough financial might to go through this. It's a question of when they want to invest, how much they want to invest for growth as they go forward. But the current level of investments with us, we believe, will continue.
Okay. And within your travel segment, as it was like maybe 1 year back, any sense on what could be the split between leisure and business?
In our segment,
as it was 1 year back, like maybe 25% of the revenues were coming from this segment. And
out of the would have been about 80% or 75% would have been leisure, 25% business.
Okay. And secondly, sir, your digital revenues as a percentage of overall have grown a lot. So is it only because the travel segment was not in the digital side?
Yes. The two things. One is the revenues which went away and the revenues which are getting replaced are more digital. Second, even you see Dynamics earlier was an on-prem kind of a solution. Now it's cloud. So it's more digital. So as we see growth, we'll see more. So it's being driven by both the factors that the revenues which went away are getting now replaced by digital services. And one of our main service lines is now more digital because it's now on the cloud kind of stuff. So both are driving the digital revenue.
Okay. And on the domestic side, if you can just give some color on, earlier I think there was some pricing pressure, but now in your conversations with your clients, both existing as well as potential, what are you hearing in terms of their ability to sort of invest more on this side as well as the pricing side?
As I said, depending upon the sector, the variability is quite high to very aggressive growth to let's invest back to let's wait and watch kind of stuff. So that's the overall thing. But the overall mood in the market is a lot more positive than what it has been across the board kind of stuff. Pricing pressure, we are not seeing any pricing pressure.
But do you see any upside from the last quarters where we had seen some compression?
Yeah, absolutely. That's, I think, if you see, I think there is a 4 or 5% growth on the top line. I think 5.5, whatever that is. So yeah, absolutely, we are seeing upsides in the market. Not only last quarter but going forward.
Thank you, sir, and I'll join back in the queue.
Thank you. We have next question from the line of Mohit Jain from Anand Rathi. Please go ahead.
Sir, hi. First is on your capital allocation. Like you guys mentioned it in the PPT as well, but is there a change in the payout versus M&A investments that you're planning for the next 12 months?
Okay. The payout, I think we have a policy. We will stick to that. M&A is really, obviously we have a appetite for acquiring more. Obviously, there is a whole lot of factors which are dependent on it, finding the right fit and at the right value and valuation. So there's no allocation as such, but the appetite to, invest is there, and that can vary from year to year based upon when we get the transaction done kind of stuff. But there's an appetite to invest more. So that's for sure. But the payout is more or less, is a fixed. We have a fixed policy of whatever 50% or whatever it is of the consolidated profit.
Okay, so you're saying when you say appetite, meaning the size of the targets that you're looking at, that may go up. Is that correct?
The size of the target, yeah. That was always high. It wasn't never any never constraining factor. It's just that obviously, as I said, it's both value and valuation are important. So if one of them don't work out, then there is no appetite kind of stuff. But the appetite was for, as I said, to do more M&A The appetite for size was never a constraint.
Okay. And sir, second was in the travel vertical. Like you said, top client may be slow or depending on how Europe pans out eventually. But given that our investment historically and our capability was very strong in travel, so what are we trying to do there, both in terms of investments and also in terms of margins? Like if travel comes back, let's say in 12 months from now, will we see further increase in margins? And currently your margins are depressed because travel is not turning out to be a revenue accretive thing for us.
Right. I mean, when things come back, obviously that will lead to both growth in top line and growth in margins. I think there is no doubt about that thing. It's a question of when is the question really.
So the other thing, connected thing is utilization. Now that, is it like the people are getting deployed somewhere else because utilization also shot up last quarter? And you are seeing growth in other verticals, I guess, for the next 2-3 quarters.
Yeah, because utilization is shot up because the number of people decreased also. So that's why it shot up. But as we go forward, we are planning to hire more people. So the utilization will be normal.
Which is 85% levels.
That's right.
Okay, sir, what is the hiring plan for the next 10, 12, or whatever you have frozen on?
We are looking at about, I think about 500 people in the next 2 quarters.
500 gross?
500 gross, that's right.
Okay, sir. Thank you. That's all from my side.
Yeah.
Thank you. We have next question from the line of Amit Chandra from HDFC Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So my question is related to the to the Microsoft account. So earlier you have mentioned that the Microsoft Dynamics upgradation program is an opportunity, and we have been doing pretty well there. So if you can elaborate, how that opportunity is panning out, and how we have placed there in terms of competition, and how we have placed along with in terms of the SIs with like Microsoft for tapping this opportunity, and roughly what will be the opportunity, say, in the next in the next 2 years from this program?
No, as I answered another person, there are 2 opportunities here. One is what we do with Microsoft in the market. So it is not an invoice we raise through Microsoft, but an invoice we raise to the customer. The second is the opportunity with what we do with Microsoft. That is, the invoice is raised on Microsoft. As I said, there was a general across the board, let's say, constraint on spending. We see that opening up, so that will lead to growth to Microsoft. But the larger opportunity is what we can do in the market. I mean, I think that opportunity, itself can be like $50 to $75 million for us in the next 2 years.
Okay. And so in terms of if you can provide any additional color on the number of enterprises that are actually looking to upgrade their existing this Microsoft Dynamics installations.
The number is large. There are, I think, 10,000 customers who are on older versions, 2009, 2012, Great Plains, etc. So even if 50% do that, the market is 5,000. Even if you break up that market again into, small, medium, large, if you just take the medium and large, they could be about 1,000 clients.
And in terms of an average enterprise, like what will be the size of the opportunity for the
opportunity could be between about $3 million to $15 million.
Okay, sir. Okay. And sir, the second question is on the investment that you mentioned that you're going to step up investment. So in our existing portfolio, what kind of gaps are there which has to be addressed, both on the Microsoft side and on the non-Microsoft side. And as you mentioned that acquisitions are always been on the Microsoft, like enhancing the Microsoft capability. So acquisition is one thing, and apart from the acquisitions, what what kind of investments we need to have in the short term and in the medium to long term, and will these investments have impact on our margins, or we have significant operational levers in house like offshoring and higher utilization, which can offset the investment that we are planning to do?
Yeah, as I said, the investment is in sales, pre-sales, consulting, marketing. So it's really across the board, across geographies, kind of stuff. So that's the investment we are talking about. Apart from getting more, I would say, strength in the technology and that kind of thing. So that's the investments. At least for the next few quarters, these investments have been factored into whatever we are forecasting as bottom line growth. So those have been factored into the growth plans of the company.
Okay, sir. Okay. Thanks for the opportunity. Thank you.
Thank you. We have next question from the line of Pinkesh Jain from Way to Wealth. Please go ahead.
Yeah, thanks for the opportunity. I just have one question. In our international business, can we see this watermark of $200 million turnover next year and our profits being at all-time highs, even exceeding FY19? So, what are the management thoughts on that?
We don't give quantitative forecast. As I said, we are looking at growth. It's for you to put those numbers put together kind of stuff. But yeah, if you see the current trend, and we could have quarters sometime next year where we make more profit than we have ever made in a single quarter.
Okay. Thank you.
Yeah.
Thank you. We have next question from the line of Vinod Mohanlal from Mohanlal Investment. Please go ahead.
Hello.
Yes,
Shrikarji.
Please go ahead.
Hello. Yeah. Shrikarji, I just have one question. Earlier also we had discussed about what is the thought process that the management has in terms of reducing client concentration risk and also sector risk in terms of over-reliance on travel. Of course, this is from hindsight because travel got affected due to COVID. But in the last 6-8 months, is there anything that management is thinking? Can you give some color on that?
Yeah, absolutely right. I mean, if you see our numbers now, the client concentration risk can vanish by itself because of what happened to the travel client.
Right.
And because of the now more larger focus on other industries, you see that we are giving a larger set of industry verticals. So absolutely, I think whatever has happened has changed that mix of dependence and client concentration and industry risk. So all of them have whatever has happened that actually has led into the right mix and right analytics as we go forward. So that's been taken care of.
Okay. And I would like to slip in my second question as well. In terms of currently, I heard, if I'm not mistaken, I heard that the onshore offshore has shifted a bit naturally because of restriction of movement of people. So do you see that when we are over this entire thing, maybe 12 months, 15, 17, 18 months from here, do you see that the mix will again go back, and will it compress the margins or any color on that? I mean.
Okay, so it's a good question. I think, it is obviously the mix will get better as we go forward in the short term. There'll be more offshore than on site, and then once things stable down, the mix will change. But it will never go back to where it was because now there is a lot more acceptability that some of these models actually work without having so many people on site. So where it will settle down is somewhere in between to what it was and where we are today. Where we are today is, most people are saying, okay, I need to get my work done, and this is the best way to get it done. Let's do it. Although it may be 100% not as effective, but they're also saying that a lot of things I was incurring money on need not have been done that way, so I don't have to do it that way. So we will move more offshoring in the immediate couple of quarters, and then once all things change, we'll get back to a little higher on site, but we'll never go back to what it was before this thing happened.
Okay. All the best, sir. It's an amazing comeback from you and your team. Congratulations, sir.
Thank you very much.
Thank you.
Thank you. We have next question from the line of Vipul Kumar Nopchand Shah. Please go ahead. An investor. Please go ahead, sir.
Hi, sir. Congratulations for good set of numbers. So my first question is why there is a sudden reduction in the headcount quarter-over-quarter?
Yeah, as I said, the volumes of the business needed only that many people. We didn't find the need to replace the people who have left. And as also said, we are going back to hiring people, so you'll see those numbers going back. Because if you see the volumes had come down by 10-15% or whatever it is, so of business in the first quarter especially, and then second quarter. So we didn't see it prudent to add back people in that quarter. But as I said in the call earlier, going forward, we're going to go back to having a greater number of people.
And sir, in first half our dollar revenue were $75 million as against $90 million in the preceding period of the last quarter. So I'm not asking for guidance, but directionally, how do you think second half will pan out as compared to second half of previous year?
Okay, there are two components there. There is a India business, so there we don't manage by top line but by margin. And there's a
no, I'm talking only about the international IT service, sir.
Oh, you're talking about the 75 is consolidated, not just last quarter.
Yeah, the first half.
As I said, H2 we are hoping to see the similar kind of growth as has happened quarter on quarter last H1. That's what I said earlier in the call.
Okay, sir. And
international services. On the India business, we are hoping to see similar growth in margin as we have seen in the quarter on quarter in the first two quarters.
And sir, lastly, how are our recent acquisitions performing? This Scalable Data and
Scalable I had told, Sopris I had told, GPW is brand new and they are reasonably right now affected by the pandemic, but we expect them to get back to growth in Q4 of this year of Sonata. So all the, and I had given fair amount of detail on both the Scalable and Sopris, where we are.
Yeah. I joined little late, so I'm extremely sorry if I repeated it. Yeah. But if you can give me some broad color, it will be helpful. Yeah.
Yeah, as I said, Scalable is fully operational and working very well. Sopris, we are saying a better integration and we'll see that going forward. GBW, I just mentioned that they were affected by the pandemic, but we see growth coming back in the Q4 of this year.
Okay, sir. Thank you very much and all the best for the future. Yeah.
Thank you very much.
Thank you, sir. We have next question from the line of N. Puranik from Enam Securities. Please go ahead.
Hi, Srikar. How are you doing?
Good, Puranik. How are you?
Your family and your colleagues are doing good and safe?
Yes, all well, Puranik.
Thank you. I have a couple of questions. One is relating to your service lines today. So are they, from your experience of what last few months, few quarters, and some earlier times, do you think you need to expand your service lines to make it more meaningful for a customer wallet and increase the deal share and get the $1 million account made right? That is one important question, because that is in the context of what happens is if you have a strong horizontal, you can build a few more verticals. One vertical that you are missing, which has high spend, is BFSI. So I think you've need to strengthen the vertical to get those verticals so that you can de-risk your concentration few of this retail, travel, and tourism?
Okay. So, yeah, thanks. Yeah, Puranik. So, that's a good question. So, I think what we have done and been doing is to transform the horizontal. So, the horizontal, as we see and we describe it in the report, which is like the data analytics, the platform engineering, and cloud transformation. Those are being, transformed, from a competency level in terms of, what goes into it, what are the additional frameworks and IP which needs to be built in, and how do you deliver digitally, how do we align it, those things to our platformation concept, etc. So that's a big process in terms of transforming not only the services, but people. We also have what is called a unified engineer program in the company. So where people are getting more unified, not what is otherwise called full stack engineers and some other terminologies. So there is a huge transformation, this thing to not only being to transform the services, but transform the people who can deliver the services. The second is whether it can get us to financial services, we have to see, but I think we have expanded at least to 2 other verticals because of the acquisition, which is agribusiness and the utility and service industry. And that, I think, itself is taking away the dependence from the travel vertical. So that's fine. I mean, the BFSI or healthcare or one of these, we'll see. I mean, I know whether we, it's a horizontal-led, vertical kind of M&A can get us there.
So when you say transforming these service lines and horizontal, what does that mean in terms of tracking client opportunity, expanding your scope of client revenue? What will that mean going forward? Will that significantly expand your ability?
Yes. So like if you have one service line, let's say we do Dynamics today with a client, then the other 2 adjacencies, even assuming the client is a very heavily, Microsoft shop, then there is a big data opportunity and then there is a big cloud opportunity, especially with the Microsoft Power Platform and so on and so forth. So there are 2 horizontals, and each of them are large enough horizontals like the dynamic horizontal. So that's what I meant, Ronnie.
So what do you do with the data? When you say data, what is your data service?
This is from end to end, right? From creating the cloud platform infrastructure using the data, and then providing the analytics and business decision making and so on and so forth. So it's end to end. Take the Dynamics data, put it into a data lake, data warehouse using the full stack of Microsoft, and then how do you leverage that to either build new applications or provide new analytics? And that's where this whole Power Platform and all is playing a big role now to develop apps very quickly using this data infrastructure provided by Microsoft.
So your data revenue can be significantly better going forward?
Yes, and we are seeing that.
And how many people work on data sets, data warehousing today?
I guess about between 400 to 500.
400. That number will go to what?
I mean, based on growth, no problem.
Now, what time? I'm saying opportunity-wise. So one is the
opportunity is vast. I mean, that can double.
Because that's a big opportunity.
It is because all Dynamics customers need data at some point or other.
So data, right, analytics and AI and ML can be a huge opportunity, isn't it?
By itself, yes. The third is what we call platform engineering, others called cloud. Then using something like Power Platforms to build new cloud applications using all this infrastructure. So that's the third opportunity as a horizontal.
So you talked about utilities and agri as verticals. So your current new horizontal services, horizontal and resultant services that you create, is it enough to get significant share of revenue from utilities and agri?
Yeah, because the driving there is still Dynamics because we have the commodity trading IP for agri, and with Sopris we have what is called a connected field service IP for the utilities industry. So the driving force is still Dynamics into these sectors, and then
services Hello? Yeah. I said the derivative service and the top layer is Dynamics. Around that you get all this.
Once we do the Dynamics, which itself is large, which somebody had asked, that itself, depending on the size of the client, the opportunity could be 3 to 15 million. And then the other horizontals post the transformation of the core infrastructure of the company.
Do you need to expand the leadership in Dynamics?
Yeah. I'd answered the question. So I think we have to, we are planning to invest a lot more in hiring people in the next 2 to 3 quarters. Yeah, absolutely.
So these skills would be what? Dynamics focus?
Yes, these are people who are who know the industry well, who work with Microsoft and understand the ecosystem in the respective market, and are also pretty good knowledge of the product.
So another question I have is in terms of your experience in M&A. So over time you have done many acquisitions. What's your experience in terms of targeting, integrating, and making it work? So is that there would always be a mix of good and bad, and what do you think? And what is the learning?
Yeah, absolutely agree with you. I think the key is cultural fit with the leadership and management, and integrating into working together into a let's say common way of working. I think because these tend to be very new business led, very project led kind of stuff. They don't have a culture of account management, account mining, account growth, and so on and so forth. So, and then expanding into other services. I think that's and it takes time. I mean, it's not very logical to say, yeah, why can't you do it? I think you need to understand. You have to get into the basic understanding of that this is another way to do business.
Correct, another way to do business. Right. So scalable data acquisition, is it a Dynamics platform?
Yes, scalable is Dynamics. That's where we got the agribusiness CTRM IP from.
Okay.
And mainly in Australia, and we have seen that business grow. I think our Australian business has doubled, I think. Okay. And the Sopris is the utility and field service.
I see. Right. So does it
both are Dynamics partners.
Truly stand to its name, scalable?
Hello?
I'm asking, is scalable really scalable in terms of opportunity for you?
Yeah, both as I said, our Australian business has more or less doubled, or even I think will grow up more than like 250%. And then how do we take that to the rest of the world is the other one, the agri business kind of stuff.
So this is what, data warehousing universe, or is it what exactly is that?
They have a IP which sits on top of Dynamics to facilitate large commodity-based industries, agri-businesses, to manage their commodity buying cycles, to ensure that they have a good visibility on cost so that they can price their end product better.
Oh, I see. Interesting. So this is basically, is it a pricing engine, or is it?
Yeah, it is a lot more than a pricing engine. It is contracting, it's risk management, it is alternative, raw material procurement, to creating an end product, all that kind of stuff, and then using all that to price the end product.
So it can work on multiple vertical platforms actually. It's not just single vertical.
No, it just works on Dynamics.
Okay, so Dynamics. No, for different business verticals it can work.
No, agri-business mainly. I mean, you have to be in the business of buying commodities and using it to manufacture something.
Using it to manufacture. Okay. It's all the business process is all about agri.
Yeah, mainly I think the large agri animal feeds. All these are where you buy commodities, mix it, and then you sell it, kind of stuff, or processing and so on and so forth. Not like steel and other things.
And you're seeing a lot of opportunity in that?
We are seeing traction, yes.
Traction there. Interesting, Srikanth. Take care. All the best to you.
Thank you, Puranik. Yeah.
Thank you.
Okay, how are we on time? Can we make it last 3 questions?
Sure, sir. To ask a question, participants may press star 1. We have next question from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Sir, my question has been answered. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments. Over to you, sir.
All right. Thank you, Vikram. Thank you, everybody, again for joining and a very lively conversation. Thank you for your support. Look forward to seeing all of you in our next call. Thank you all again.
Thank you all.
Very much.
Thank you all. Thank you. Thank you all.
Thank you, sir. Ladies and gentlemen, on behalf of SONATA Software Limited, that concludes this conference call. Thank you for joining with us, and you may now disconnect your line.